Monday, January 26th, 2026, that everyone thinks today was a boring Monday. The S&P slipped a little. You're waiting for Apple's earnings. You're waiting for the Fed. Stop. You're looking at the wrong chart. While you're watching the index, the single most important alarm bell in the global financial system just broke the glass. And almost nobody is positioning for what comes next. This is the pre-market pulse. The Monday is not blue anymore. Here is the story you're being sold right now. Open any financial news app. The headline is probably about the Magnificent Seven earnings. We have 102 companies in the S&P 500 reporting this week. The narrative is simple. Sure, things are volatile, but AI spending is shifting in a higher gear. The crowd believes that the biggest risk this week is whether Microsoft or Meta can justify their capex. They believe that if the Fed holds rates steady on Wednesday, which they will, that the soft landing is still on track. They look at the market and say, it's resilient. They see gold rallying and say, oh, that's just a little inflation hedge. They see Trump's tariff threats against Canada and think, it's just noise. It's a negotiating tactic. They are wrong. They are pricing in a world where nothing breaks. But look closer at the flows. The smart money isn't buying the AI utopia. They are running for the exits. There are three signals flashing red today that simply cannot coexist with a healthy stock market. Signal number one, the gold panic. Gold didn't just go up today. It broke $5,100 an ounce. It is up 64% in the last year. Do not confuse this with a normal bull market. When gold moves this fast, it isn't an investment. It is an insurance policy against a burning building. We are seeing record inflows into gold ETFs and frantic demand from central banks. Now, usually when gold flies like this, the debasement crowd screams that the dollar is dying, and they buy everything that isn't nailed down, including crypto. But that brings us to signal number two. Crypto is dumping. If this was a money-printing rally, Bitcoin should be at all-time highs. It's not. Crypto funds just saw $1.7 billion in outflows last week, the biggest exit since November 2025. Listen to what that money is saying. It is leaving the speculative debasement trade, crypto, and flooding into the survival trade, gold. This is not risk-on. This is risk-off on steroids. The market is telling you that they don't trust digital assets to hold value when the geopolitical walls close in. They want physical metal. Signal number three, the physical world is breaking. While the stock market debates AI software margins, the physical supply chain is snapping. Look at natural gas. It just rallied 66% in a single week. Why? Because winter storms are freezing production and exposing how fragile our energy grid has become. Look at mining. South African production, one of the world's key sources of platinum and raw materials, just dropped for the first time in 6 months. And then look at the politics. We have a 100% tariff threat on the table for Canada, our largest trading partner, because of a trade deal with China. Do you see the contradiction? Stock investors are pricing in business as usual. Commodity investors are pricing in systemic fracture. They cannot both be right. So, what happens when this resolves? History is very clear on this. When the fear trade, gold, goes parabolic while the greed trade, stocks, stays flat, we are usually days or weeks away from a liquidity event. Think about the mechanism. Gold at $5,100 means the cost of safety has skyrocketed. Natural gas exploding means the cost of energy, and therefore inflation, is about to roar back, right as the Fed is trying to hold rates steady. This destroys the Goldilocks scenario for the S&P 500. If energy prices spike and supply chains break due to tariffs, corporate margins get crushed. All those AI productivity gains? They get eaten by higher electricity costs and tariff barriers. But the bigger risk is liquidity. When huge players, hedge funds, sovereign wealth funds, need to cover losses in their risk books, what do? They sell what they can, not what they want. They sell Apple. They sell the S&P 500. We're seeing the early tremors. Tech stocks are slipping. Airlines are down because of the storm. The consequence isn't just a correction. It's a repricing of the world. The market is realizing that you can't run a frictionless digital economy on top of a fractured physical world. Here is the reality for tomorrow. The mainstream will tell you to watch the Fed meeting. They will tell you to watch the earnings calls. Ignore the words. Watch the flows. If gold holds $5,100 and crypto continues to bleed, the smart money has already made its decision. They are bunkering down. The window to rotate out of hope and into reality is closing. Don't be the last one holding the bag when the narrative finally catches up to the price. This is the pre-market pulse. If you like our content, remember to hit that subscribe button.